and welcome to Business Incorporated, live to you from Channel's television headquarters in Lagos. I am Bolaji Akinwale. Today on the program, China prepares to hold the G20 summit. Also, a look at plans by the government of Nigeria to attract investment into agriculture and real estate sectors. Plus, the latest figures from the local fixed income markets. Okay, let's begin with the preparations that have been made by the Chinese government to host the next group of 20 biggest economies summits next month. The country says it seeks to foster economic cooperation among members during the meeting.
Chinese G20 Sherpa and Vice Foreign Minister Li Baodong on Monday announced that Chinese President Xi Jinping will preside over the upcoming 11th G20 Leaders Summit and attend events including the Business 20 Summit 2016 and an informal BRICS leaders meeting.
President Xi Jinping will preside over the welcoming ceremony, the opening ceremony, meetings of 5 phases, the closing ceremony, and 11 other events. After the summit, Xi will meet the press to brief on the main results and related information of the summit.
According to Li, before the G20 summit, President Xi is due to address the opening ceremony of the B20 summit, a platform for the global business community and the economy regulators to make policy suggestions to the G20. He will also meet with leaders from the BRICS.
President Xi will attend some important events before the G20 summit. First, he will attend the Business 20 summit. The Business 20 summit, also known as the B20 summit, is the largest summit for business community so far. More than 850 people have signed up for the summit. In the keynote speech of its opening ceremony, President Xi will expound his views and propositions on China's economy, the world economy, and the governance of the global economy. Second, leaders from the BRICS will hold an informal meeting based on common practice. President Xi will attend the meeting and deliver an important speech.
The 2016 G20 summit will be held in the city of Hangzhou in East China's Zhejiang province from September 4 to 5th.
Meanwhile, Japan's economy grew at a weaker rate in the second quarter, despite an aggressive spending policy by the government. GDP grew at an annualized rate of 0.2% in the 3 months to June, below market forecasts of 0.7%. The figures come after the government launched a massive new stimulus package worth 28 trillion yen. That's an equivalent of $265 billion US. The benchmark Nikkei 225 share index dropped 0.3% and concerns that Asia's second-largest economy will continue to struggle. In addition to the stimulus, Japan's central bank is running negative interest rates and an unprecedented asset purchase program. Despite these efforts, there are concerns around slowing domestic consumption, capital expenditure, and the potential for weaker net exports, thanks to a stronger yen. And now let's take a look at the European markets as we head to the Frankfurt Stock Exchange, where Conrad Busen is standing by to talk to us about the latest developments in Europe. Hello, Conrad. Good to have you on the show. Now, last week, economic data showed slower growth as seen in Asia. The impact of these was felt on the markets in general. Now, while stocks in Europe are trending upwards on the first trading day of the week, what's driving this?
We've been getting a couple of very positive earnings reports, Bulaji. For example, from Tele Columbus, which is Germany's third largest TV cable operator. Also, Deutsche Euroshop which is a large operator of shopping malls here in Germany, presented strong results. So that's positive. H&M, Hennes & Mauritz, the large retailer that's selling fashion all over the world, posted very strong results, especially the month of July went pretty strong for them. Bundesbank says the German economy is on track. The German manufacturers said that they've hired quite considerably during the first 6 months of this year. All this is news pushing the stock market up. You can see here another all-year high we've seen this morning with the DAX, and since then it sort of is oscillating at a very high level.
Now, plans for a quick UK exit from the European Union in early 2019 may have been stalled after reports show that the Brexit department is not yet ready for it. Now, despite this, JP Morgan has said that its overweight recommendation for UK stocks remain in place. How do you think this position would support stocks from the country going forward?
Well, the UK stocks have quite a positive outlook and support, also given the fact that the Bank of England has made it quite clear that it will enhance business or do everything to enhance business activity, to enhance lending. That is something supposed to really have spending go on in the United Kingdom, also spending for mergers and acquisitions. And remember, many of the smaller and mid-sized companies in the UK have been talk of takeover in some direction. So many here are looking forward to a lot of takeover and mergers and acquisition stories in the mid-cap sectors in Britain, but also here in Germany.
Now, Conrad, looking ahead, what should traders and investors alike expect in the course of this week? We'll see the appetite for gold reaching record high at the Deutsche Börse in Frankfurt.
Well, earnings season is sort of coming to an end at the moment. We're still getting a couple of earnings reports from smaller companies in the course of this week, for example, from Wirecard, Zooplus, also Sixt, which is an important auto rental company here in Germany. We'll be getting economic data, the ZEW index for the month of August, also industrial production, which is, factory output for the month of July in the United States. So a couple of data to digest and to consider, heading towards new discussions about what to expect from interest rates in the US.
Thank you so much, Conrad Busen, DWTV financial correspondent. And now to Asia, where most markets reversed early losses to trade higher on Monday. But Japan shares, like I mentioned earlier on, slipped after data showed the world's third largest economy failed to grow in the third 3 months to June, missing already subdued forecasts. The benchmark Nikkei 225 wavered between gains and losses before closing down 0.3% at 16,869.56. The TOPIX fell 0.5%. In Australia, the ASX 200 advanced 0.1% to 5,540, with a heavily weighted financials sub-index rising 0.59%. In Hong Kong, the Hang Seng was up 0.75% in afternoon trade. And Chinese mainland markets were also higher, likely giving a boost to sentiment across the region after Japan's data disappointment. The Shanghai Composite advanced 2.4% to above 3,000 points, and the Shenzhen Composite 2.51% was the gain for that. Now, the markets likely expected additional stimulus from Beijing after the mainland's data last week showed the economic health of the world's second largest economy was falling short of expectations. And in the UK, Chancellor Philip Hammond has indicated plans to replace EU funding for farmers, scientists and other projects after Brexit. The amount, which is expected to cost up to £6 billion a year, will be guaranteed by the Treasury to back EU-funded projects signed before this year's autumn. Agricultural funding now provided by the EU will also continue until 2020. However, critics say that the guarantee does not go far enough owing to uncertainties. We're going to break now. I'll be right back.